There's a lot of buzz going around about Hong Kong. The city is making all the headlines, but not for the right reasons. That's because Hong Kong has been having a period of lows. It goes back to 1997 when the British handed over Hong Kong to China, with promises of the city having 50 years of self-governance. This included freedom of assembly and free speech. But Hong Kong's honeymoon period ended when China stepped in. For the first 2 decades after the United Kingdom's handover, everything was going well for Hong Kong. But 2019 saw a stark change. Carrie Lam was given leadership duties of Hong Kong. First, she banned Hong Kong's pro-democracy party on grounds of threatening China's national integrity. In 2019, Lam's administration proposed an extradition bill that would deport dissenters from Hong Kong to China. This led to wide-scale protests in the city, shattering Hong Kong's political stability. In response, China clamped down by imposing a new national security law. As protests against China picked up in Hong Kong, Beijing deployed more than 10,000 security officials in the city. It was a military-like takeover of Hong Kong. China is Hong Kong's largest trading partner and its second largest source of investment. This means that if China's economy grows, Hong Kong reaps the benefits. But if Beijing faces fiscal woes, then Hong Kong feels the effects. Since the COVID-19 pandemic, China's economy has hit a roadblock, and Hong Kong has been collateral to that. China is facing a crisis in its property and manufacturing sectors, and residents of Hong Kong are facing the heat.
I prepared for over 2 months because after failing the National Civil Service examination, I attended some recruitment events, thinking of filtering through some companies and then submitting my resume. I roughly sent out resumes to about 800 companies at that time. Maybe it's because I'm a recent graduate with not much experience and the response was not very overwhelming. I probably communicated with around 1 or 200 of these employers.
Anytime there's trouble in China, it impacts Hong Kong's stock exchange negatively. The Hong Kong stock market has been in a bear market for the last 3 years. Stocks have rallied down to the levels seen in 1997 when Britain handed over Hong Kong.
I would expect more and more proactive fiscal and also monetary policy Chinese government will introduce after the Chinese New Year. So I don't really see so much downside at the moment, but obviously there's no momentum for rebound in the short term, as well as the Hong Kong stock market.
As China's economy continues to face turmoil, Hong Kong's enterprises see a slump. Stuck in the middle of the power play between China and the West is Hong Kong. The rivalry between the US and China has almost forced the city to pick a side. To make matters more complex, the United Kingdom constantly sides with Hong Kong, and this doesn't sit well with Beijing.
The British side should straighten out its mind, face squarely to the reality that Hong Kong returned to China long ago, and stop interfering in Hong Kong affairs, while it should reflect upon itself and refrain from applying double standard.
It looks like there's no easy way out for Hong Kong. The city, which poised itself as a major investment and trade hub, has lost its drive and motivation. Hong Kong has truly been cynicized.